I'm Charlotte McLeod with investingnews.com, and here today with me is Steve Barton, host of the In It to Win It show. Thank you so much for being here. Great to have you.
Well, thank you, Charlotte. It's a pleasure.
Really good to be back with you. We're catching up after our last conversation just a couple months ago, but so much has happened. And today, of course, I want to start with gold because it's been having such an exciting time lately. I remember during that last conversation, I asked you, okay, how is gold going to perform over the course of the summer? And you told us probably going to move sideways for a little while longer and then start moving back up, which of course we've seen. So now we need to look forward to Q4 and see what you see coming for gold there.
Okay, if I could share my screen here, and I'm going to go right to the gold chart. And so we had this kind of sideways consolidation here that we were talking about, right? We had the nice run in gold going up. This is the gold futures chart, and then almost like a bull flag kind of sideways consolidation, and then we had the breakout. And so my next target for that was 37.51. I really got into the weeds there, but anyways, just remember 37.50. And I thought we would hit that and then have a decent sized retracement, probably something down here, down to like the 200-day moving average, which is this blue line. We blew through that like a hot knife through butter in the last couple of days. And I think the next upside target is probably going to be $4,000 gold. Now, the way I got that was if we go out long term here, I'm going to go to the weekly chart on gold. We'll get rid of the RSI and MACD here. And we've got this super bullish cup and handle pattern right here, right? Like that. And then now we've had this beautiful breakout. And there's two ways to measure targets on a cup and handle pattern. And one of them is to use what's called I call it the value target. And basically you just take the bottom of the cup to the top right side of the cup and see we've got about $1,000 move. And then you extend this up to the breakout. And we can see that we've surpassed that. We've gotten up to, that was around 3,100 or so. That has come and gone. The next way to measure it is to do the logarithmic target. And so you take the log target, which is the percentage move, and we basically have 100% move from the bottom of the cup to the top right side of the cup. And if we extend that out, we can see that from going from there up to 100% move, if I shrink this down just a little bit, anyways, it takes you right around 4,000, maybe 4,100 or so. Another way you can measure the target would be using a Fibonacci extension, which is how I got the 3750 target. And the next targets up there, depending on where you measure it from, some going back as far as 25 years, others a little bit more recent. The next number I get after 4,000 is around 4,300. I do got to say, I think I would be pretty shocked if we got up to 4,000 and didn't have some type of corrective move. I suppose anything's possible. We blew through the 3750. I didn't expect that. So maybe it'll go on up. But yeah, we're getting pretty stretched here. I think, for most people that are, watching and they've got a lot of gold stocks, I think that you really need to think about trimming, maybe treat it like a money manager. And if you've got 20% of your account in gold and gold stocks, and, with this last run, maybe you've gotten up to 22, 23, 24%, maybe knock it back down to 20, you got to pay yourself at some point. When I go here to the, GDX, I mean, this has just been on my show, I put in these red, yellow, and green lines as kind of like, limit order entry points. And I haven't really been able to move these things up in good conscience because I just feel like we've just gotten way too stretched,
Yeah, this is really interesting to look at. I like how you show the multiple ways we can get up to that next gold price target. A number of points I want to follow up on. I think the first direction I want to go. So we're looking at that 4,000 level next for gold. And I know last time we're talking, you're kind of saying 4,000 by the end of the year. Is that still when you think we'll get there, or is that move forward now that we've seen all this other price activity?
I think it could happen pretty quickly. I really do. I think it, just the way these breakouts are going, the patterns I'm seeing, I mean, it wouldn't surprise me if we're there within the next month or month and a half.
Yeah, I think that's definitely sounding more and more possible the further forward we go here. And so maybe then we can talk a little bit more about those potential entry points for people who are just getting into gold, or maybe they still want to add to their position as they see this further price increase coming forward.
Okay, I'm kind of a bottom picker. I'm the guy that kind of collects here while the bull flag is forming. If we go to the GDX here, the green arrows are my entry points and the red arrows are where I'm trimming. Anytime you see this is kind of like a running joke on my show, past the point of concern. I got it from Rick Rule, basically selling enough to where your position is free. So I'm not really the guy that can buy these like breakouts here. What I like to do is I like to see radical corrections. And then I kind of catch double bottoms where if this shoots up, and then it were to come down to the same price point, like right there, I would be the guy that would catch that double bottom on the next wave up. And if it's any consolation, I think the further and faster this moves up, I think the harder the correction will be. Like, honestly, what would have been best, I think, for long-term gold investors is for this to have hit the 3750 and then correct back down here to the 3,500 level, or even better, down here to the 200-day moving average, and then bounce up. That, I think, would have created a much longer, more sustainable bull run. This kind of blow off top that I'm seeing here, I just can't press the buy button on something like that. I would be patient here, and I would wait for a retrace. And that may sound a little strange. I just said that I think it's probably going to 4,000. Yeah, but are you going to be able to like buy here at 3,800 and then sell at 4,000? I don't know. You're a better man than I am if you could do that. I don't know if I could. We could get another little target here. This is a quasi like bull flag right here. It's not a very good one. I don't know that it's one that I would really trade, but it's something. And we take that measured move right here, add it up to the top, and we've already had a little breakout of that. And it could go up to there around 4,100 or so, which kind of lines up with the logarithmic target that we talked about before on the cup and handle. As far as entry points here on gold stocks, I've generally been a seller, not a buyer.
I think it makes a lot of sense how you're explaining it there. And one thing I wanted to ask you when it comes to looking at the gold price. So from my understanding, when you're doing technical analysis, it's looking at a lot of patterns, looking back at historical performance. And when we get into times like this, when we're kind of in uncharted territory for gold at all-time highs, does that impact how you're looking at the charts there? Does that impact the work that you're doing?
Yeah, it does a lot. For example, so if I go back on the gold chart here, once we've broken out to all-time highs, you're kind of in no man's land, like it hasn't been done before. This is a whole new price range. So there's no real back test. Like if I go to the silver chart here, let me hide the drawings here just so we can clean it up a little bit. Go out to the weekly, and we can see that we've had a top back here of, 1980 around $50, and then another one here around 2011. So that's kind of what you're referencing, right? So when we can all see that back here in around 2011, it got up to the same point around $44. Okay, so that's going to act as resistance. And then again, it got up here to like 48, right? So that's going to act as resistance when the price gets there. But once you blow past that, once we get up to 52, 53, it's never been done before. So there's no reference to look back on in history to see like, okay, where could be some hiccups? Where could be some stopping points on this? What you have to do on that point, like we're doing now with gold, is you have to use extension targets like Fibonacci extension. You got to use cup and handle patterns. Okay, what's the upside target on that? You have to look at past breakouts and see how far did it move in the past breakouts, and what could that look like in today's dollars? So yeah, definitely. When you're in new all-time highs, it kind of enters a different phase of technical analysis, one that's a lot less certain.
Very, very interesting to go into that. And I know that you're really focused on the technical side, but for gold, it's got so many fundamental factors right now that are in its corner and helping to drive it. So I thought I'd spend at least a little bit of time there and ask you, when you look at kind of the fundamental side, what are you picking out as maybe gold's top driver at the moment? What are you focusing on there?
Okay. Well, here's one. This is the M2 money supply.
Good one. Good one.
As this goes up, right? Like as governments around the world, as they print more currency, it takes more of those dollars or yen or yuan or whatever to buy the same goods and services. And so as the money supply goes up, the price of gold and silver and cost of a barrel of oil and, a pound of copper, fill in the blank, is going to go up. So governments have kind of entered into this experiment on August 15th, 1971, where they're all just on a fake fiat currency. And it's kind of like some of our mentors say, like, it's the cleanest shirt and the dirty laundry the dollar is. So you kind of base it on that. But I think, like a lot of these, I have, I compare a lot of commodities to gold because I look at gold as real money. And, these currencies are just kind of floating aspects in time compared against each other. I think if you can compare it against something like, start looking and thinking of things in like, well, how much is a house priced in barrels of oil? How much is a house priced in 1,000-ounce bars of silver? If you can kind of compare things, their cost, not in relation to the currency that you're using, but in relation to the average cost of an SUV, that I think kind of lets you know what's going on with it. So long story short, fundamentally, I still think there is some major tailwinds for gold. I'm starting to see some cracks in the general market. I mean, the jobs market isn't looking very good. That is way underreported. There are far more people unemployed than they're talking about. I think we're going to enter into a recession. And when that happens, historically, gold usually has a sell-off because it acts like it should. It's real money and people use it as so, and nobody cares about their gold stocks when they lose their job. They got to pay for it so they could pay the mortgage and put food on the table. And I think we'll have a pretty good correction, and I think we're getting closer and closer to that. The further and faster this moves up, I think the harder the fall will be. And I'm kind of looking forward to that. I think I've been raising some cash, and so have my followers. And I think when that comes, it's going to be a nice little, when everyone else is selling and getting out, that's kind of when you need to double down,
Yeah, great takeaways there and a good chart to go along with it. And I want to spend just a little bit more time looking at the gold stocks because I remember last time we were talking, I believe it was you had just sold Barrick and Newmont, and you're talking about a rotation toward mid-tiers. And so I'm wondering if we can check in on your current gold stock strategy. I imagine that's kind of still the direction that you're going in, but anything further you'd add on that note?
Yeah, I would say generally speaking, I've been selling. Okay, so here's GDX, and I'm probably going to trim a little bit more on this one. Same with GDXJ. Usually when you get a chart that just has, 8 candles that are all green and gapping up like this, that is completely unsustainable, and so I'm going to be selling there. You're right. I did get out of Newmont, got out of Barrick, kept my Agnico Eagle position, and I rotated a lot of that into Equinox Gold. I think those mid-tier ones are going to be doing well kind of in this part of the cycle, but they've also had a really fast run really quick. If I just pull up EQX here real fast, we could take a look at that. And since our last interview, it looks like I was psychic. But yeah, basically we're buying down here when nobody cared. And then we recently took profits on that. So it kind of got up to our targets here, right in between these two white lines. And we took profits in there, but I really don't feel good about recommending this one until it gets back down here to the red, yellow, and green lines, which I hope happens. I really do. I hope that this sells off like I'm anticipating and has a nice little correction, and then we can rinse and repeat the game again, But I think a lot of these things, the hate that was surrounding some of these mid tiers is completely gone. And, from what I've heard of Beaver Creek, I wasn't there. I've heard there was a lot of companies there that people haven't seen in a long time. And that's usually not a good sign. That means that things are oversubscribed. You know what I mean? There's too much euphoria around it. Like I like to find, assets that are hated and cheap, and gold stocks are not hated anymore. They've become, I think they've entered loved. and I think we need a little washout here to kind of get some, as Rick would say, some jilted lovers in the market, and then that's when I'll strike again.
Yeah, I think there's certainly been a change, and another good chart that shows us just how quickly things can move. All right, so I think we've taken a pretty good look at gold, and also, of course, want to see what's going on in silver. We've seen the price get past $44 per ounce, and when we were talking last, you were giving us a target of 41.50 or so to watch. So, of course, we also need to ask, what is the next silver price target that you're looking at?
Okay, yeah. So last time we talked, we were approaching 41.50, and that hit some sideways resistance, kind of like gold did for a while, having that bull flag. This had a similar formation. So my next target on that after 41.50 was 44, and it looks like we're going to go through that. I mean, as we're recording today, this is an impressive looking chart, and I'm a little shocked. I thought that once we hit 44, it would be a pretty quick correction and on the way back down. But if I go back on the silver chart, we can see the last time we did it, I alluded to it just a little bit earlier, is we could see this one bar right here. The high price right here was 44.27.5 cents. And today we're sitting at 44.56. So we've exceeded that. Which is exciting and surprising as well. So the next stop that I see, if I bring back this Fibonacci extension tool, puts us right around $48. And so I could see us getting up to maybe just a little south of that, 47, something like that. This may be the run to 50. Now, I would be shocked if we got up to $48, $50, basically creating a triple top, right? Basically creating. Now, the $50 over here in 1980 doesn't even really show up on the chart, but it's there. Someone paid for it. But you can basically run a line straight across here. And for it to hit this and break through, I would be pretty surprised. I think what's most likely to happen is we're probably going to come up to that, touch it, and then have a pretty nice correction. Back here when silver was 18 bucks an ounce, the average all-in sustaining cost for the miners was 19. So the price had to go up, or the supply is going to dwindle because they're not making a profit, right? The price doesn't have to go up anymore, right? The silver miners are making massive profits here, and it doesn't have to keep going up. The only reason I think that it's going to is because of what's happening with the economy. We got a little interim here peak, I think, right before the recession really starts to do its worst. And I think that's when people will start liquidating their positions. But like if we look at some of the, like here's the gold to silver ratio. This is pretty interesting, and because it's happening like yesterday and today, is we've had this triangle pattern here that has, let me get rid of the volume so you can see it a little bit better. There we go. See, we've had like this little touch, and breakdown. So it looks to me like silver's going to outperform gold here. Now they could both move up, but I think silver's going to move up a little bit faster because it's broken this pattern. And so the next like real thing to catch it, I mean, is somewhere around like 82 to 1. And then we could get all the way down here to maybe like 78, 75 to 1. So silver could have a pretty nice outperformance here, driving it higher there as far as in relation to gold. This one is an interesting one, and we just took profits on this yesterday. This is the SILJ, so the Junior Silver Miners ETF. Here, this is back in 2013 when in its inception, and after that, you can see it just entered into a massive bear market. But this has kind of a little cycle to it. Some guys call them time counts. I don't know. I don't even know if I have a word for it, but see how it just kind of follows this cycle of like this U and this U. Like, does that look sustainable? At some point you got to pay yourself. Now I haven't sold everything. What if I'm wrong and this thing just blows up and goes to $50 a share or something? I want to still be in the game, But I've certainly. Oh, I forgot to put the PTPOC here. Yeah, I am well free on this one, and so are my listeners. And that's kind of textbook right there. Just pick the high. See, there's another one right here. You can probably already see it, but I'll draw it. Is you got kind of this downward channel trend line right there. Like those are little points where you can kind of take profits, But when it's just screaming and all you see on the weekly chart are just green, gap up, like you got to click the sell button at some point, in my opinion.
Yeah, I definitely see what you mean. Okay, so looking at silver, we have that $48 level that you mentioned you're looking for. I'm going to ask again, do you have a time frame on that you would assign there? How are you looking at it?
Time frames are tough, but I think sooner rather than later, probably in the next I don't know, few weeks, something like that, maybe a month. If it's going to go, it's going to go quick. And if this is going to reverse, I think it's going to reverse quick. But my money's on up. I think, and again, I'm not a breakout guy. You know what I mean? I'm a bottom picker, so I can't buy these. I'm selling here, but it looks to me like it's probably going to hit 48.
Yeah, I know the timing is really tough. So thank you. Appreciate you going into that. And also on the precious metals note. So before we turn the camera on, we're talking a little bit about what's going on with platinum. And you're mentioning that the chart is looking pretty interesting today. So platinum is one for me. It's kind of been in and out of the news as the price moves this year. So what are you seeing right now? How's it looking?
Okay, this is really interesting, and I saw this in real time when we were talking. I clicked on platinum, and oh, wow, that's pretty cool. So long-term view here on platinum. Okay, we've had massive move up, and then down, and then up, and then just kind of consolidated here in platinum, and it was pretty boring for about, I don't know, 10 years or so, since like 2015. It just kind of hung around an average cost of around $950, somewhere around there. Recently, we've just broken up to the upside, which is fantastic because we've had platinum shortages for a while. I know you talked to Ed Stirk a lot, and I started having him on my show. And there is a platinum deficit forecast for the foreseeable future. So that's encouraging if you're a platinum investor. So here's where we are now. Basically, let me go to the daily here. I kind of like any entries anywhere around $1,400, somewhere around there. I think that's kind of our new price. We're talking about platinum for 2 years and nobody cared. It was $900, and anytime it got down there. But the risk of that was, the risk of being a bottom picker is you could be a bottom picker for a decade and just be wrong, and there is a time value cost of money on that. You know what I mean? Inflation is eating away at your dollar. But the fundamental case for it was basically that there's a diminishing supply, increasing demand, and these miners are kind of running out of cost-effective platinum to pull out of the ground. So eventually that reversed. It looks like we're here. And I think this one could actually outperform silver, which is kind of a bold statement. But if we go here to the platinum to gold ratio, this is basically how I'm playing it, is I'm not necessarily looking at the price so much of platinum, is I'm looking at the ratio, and the ratio of platinum to gold and platinum to silver. And the further down this is on the chart here, the cheaper platinum is compared to gold. And the higher up on the chart it is, the more expensive platinum is to gold. And same thing here with silver, is the further down here, the cheaper platinum is in relation to silver. And then the higher, the more expensive. So basically what I'm going to do is I'm going to start selling my platinum or trading it for gold once we reach these levels. So once platinum gets to parity with gold, once you could trade 1 ounce of platinum for 1 ounce of gold, right? Then I'm going to trade half of my platinum for gold. Once it gets up to 1.5 to 1, I'm going to trade another 30%. And then if it ever gets to 2x to gold, which I think it will, then I will trade the remaining bet that I have on platinum for gold. But yeah, now platinum in relation to those two metals are extremely cheap. Even though we've had a nice run here, it will be interesting to see if we get a little breakout from this trend line right here. You need 3 points to make a trend line, and we've got 3 right there. It looks like once this hits up to the 4th one, this may actually be a breakout that I could buy. Okay, like a triple top hit 3 times. This would be the 4th one, and it looks like it's coming here pretty soon. So if it got up to, let's see what level that would be. That would be around, call it 1530. If it broke out to 1530 in the next day or two, I would actually probably buy more platinum. So that may be one example where I could buy the breakout.
Okay. There's always an exception, I think, that proves the rule. So that's what it is there. All right. Really good to take a look at platinum. It's definitely interesting. And I've been speaking to Ed Stirk for years. We spent years, I think, talking about those positive fundamentals before the price started to move. So it's interesting to see how you have to balance the timing. All right, so let's move over to uranium, which is another one where I think the timing is key. We had talked about that last time as well, and we're speaking about that disconnect between the term price and the spot price. And you're mentioning, all right, the term price was higher than the spot price, so there was some room for it to move up. So probably interesting to take a look at how that's been playing out since that conversation.
Yeah, so we've gotten a little bit of catch up here. The term price, the cheapest term price going 12 months or more out right now is sitting at $81. Okay. And today we're sitting at $78.15. So we're pretty close. We're not as cheap as we were before. When we were talking before, it was around $70 or so. That gap is closed. So the bet isn't as good as it was back then, but I still think that there's some room for uranium to go here. The fundamental argument is still very, very good. And one of the things that I've been doing personally, not financial advice or anything, but one thing I've been doing is I've been storing some of my dollars in this fund right here. And this is SRUUF. This is the Sprott Physical Uranium Trust. And I just think uranium is going to outperform pretty much every currency on the planet. And so if you can get into this fund and basically store your dollars, I think that's a better bet than your currency as far as cash. It's super liquid for, anyone watching this show and, for all of our followers. And I like it a lot. There is an interesting pattern right here that I shared on my show. Now, we talked about the cup and handle pattern before. And so for a cup and handle, it needs to be in a bullish uptrend. Click. And then here you got the cup, the handle, and then off. And we've just had a breakout here on the cup and handle. So we could do the same thing, and we could do a measured upside target, just like we did on the last one. And we basically just take the bottom of the cup to the top right side and then project it up. I won't bother with the log target here because we got to get to the value target first, but that would take this fund up to $21, $22, somewhere in that range. And so I think it could have another couple bucks to go. But yeah, I like this fund a lot. I've got 5% of my account in it. Maybe that's a little heavy to be all into uranium. I suppose we're one Fukushima away from that bet blowing up, but yeah, I like this one a lot. But I will be trimming it, I think. One of the other ways that I would look as times to trim this would be when this moves to a premium. If you go to Sprott's website, they literally display what the cost of uranium is and what you can buy it for in this fund. And historically, whenever this thing gets down to like a, 15%, 12%, I've seen it as high as 18% discount. In other words, you could buy $100 worth of uranium, but it only costs you 82. That's a pretty good deal in my book. You know what I mean? So that's kind of where the green arrows are. And then our, the kindergarten way to sell it is once that goes to a premium, then I unload it. But this is one exception here in that the bullish case right now and the fundamentals for it are so good. And I think the fundamentals for the dollar are pretty bad that I don't mind hanging on to this, even though it's at a premium, because I think it'll outperform cash.
Yeah, that's an interesting way to frame it that I think might help people understand it a little bit more, the opportunity there. And I want to take a little bit of a look at the uranium equities as well, because I remember you had told us maybe they were getting a little bit ahead of themselves. And my sense is that since we're talking previously, the developments in the uranium market may have pushed some of those stocks even further. I know we had, among other developments, because there's always things happening in uranium, but the U.S. administration potentially talking about increasing uranium reserve. So for the stocks, how are you feeling?
That's pretty well said. I think they're pretty stretched. If we go back here, so this is URNM, right? And if you have no uranium and you just want to get into uranium after you've purchased SRUUF, I think this is the next best thing. And we can see historically, so this came into be around 2019, and the first big move here was 165%, and then we had a nice little 30% sell-off here. And then the next move up was 105. And then it was just boring forever, like for a couple of years, right? This is when I learned about it, or you would have seen green arrows over here. Then we had a 103% move, red arrows sell, nice correction. Should have sold there, but now that I could see the future, I could see straight looking backwards. Kept buying more and then trimming position, right? So it's more than 2% of the account now. It's probably higher than that with this last couple of days. But this is kind of one of those kindergarten methods in technical analysis, right? We look back over here around $60 on this day. It got up to 59.52. So we've exceeded the all-time highs right here from the previous one. If there's any time to trim and take some profits, that's the easiest one you're going to get. You know what I mean? And I don't think it's a coincidence that we're having a little bit of hesitation right here and it's not just blowing through it. It's because as technical analysis, we're all looking at the same thing. You know, I mean, with some exceptions, some guys have different moving averages or whatever, but the vast majority of us are just looking at the same thing and we see the same thing on the charts. And when you see it touching, a previous all-time high, there's a bunch of people taking profits there. You know what I mean? That's not a coincidence. So I think it'd be prudent to do that. You know, if you got in down here around when Trump did his Liberation Day and everything sold off, you're up 118% today. At some point, you got to click the sell button, you know?
Yeah, it's always a good reminder. You do have to remember to do that at certain points and not get too attached. So also on the energy side, I remember you are liking oil and gas as well. So this is less of a strong point for me. So I'm wondering if you can review the price action perhaps that we've been seeing in oil and what the charts are telling you there in terms of what comes next.
Okay, yeah, the oil is really interesting. I put something out to premium subscribers to watch this white line right here. Let me get the volume out of the way so you can see it better. But you can see that right here, it hit, if I hover over this, it hit a low of 61.45. This is WTI. And then here, it hit 61.45. And we're waiting for it to hit 61.45 and break down or break up. And it just never quite got there. It got right here to 61.61. Maybe that was tradable. Maybe not. Maybe I'm getting a little bit sometimes I get too far into the weeds. But I was looking for an opportunity to short oil this week, and that doesn't look like it's going to happen. It looks like oil's going to move up next week. But I think ultimately we probably do get a little bit of a breakdown here in some of the oil equities. And I'm kind of hoping going into this economic recession, if I'm right that we're going to have one, I think oil is probably going to get sold off because that's usually what happens during recessions. You know, people travel less and companies need less energy for their businesses because people are buying less stuff. So the energy to do that, oil, usually goes down. So I'd like to catch a little shorting opportunity here. But generally speaking, I think we're probably going to have a breakdown in oil. Some of the levels that I'm watching are around $60. And then this one right over here would be 55. So if it gets down to that point, here's a really easy one that just about everyone can bet. This is XLE. So this is basically an oil ETF. The biggest holdings are the two best companies, Exxon and Chevron. And then it goes down from there, Occidental and ConocoPhillips and all that. But, you know, I think for a lot of people in their 401ks and retirement accounts, this is a real easy one and they're offered almost everywhere. I like this spot right here a lot. And that's why I got the red line drawn on it. And you can see it just came down there perfectly and then just bounced right up. And it's not super scientific. All it is we're just looking right here at this 200-day moving average is the darker one. And the 50-day moving average is slightly lighter and it's crossing above. So that in technical analysis is called a golden cross. And, that's a pretty easy entry point right there. Now, I would expect in a recession that this is going to sell off even more. So after that, let's say your level, if you haven't bet this one yet, that would be your first entry point, 87 or maybe a couple cents above. And if I'm right and this gets going through, it'll hit that one. And then the next level of support is going to be right here. It's going to be 84.50. Okay. And then the one after that, I got down at 79.25. But remember, oil can get stupid. When it got into COVID, this was the trade of my life when oil went negative. I mean, these went way down. So this could have a super washout. But if our mentors are right, the average all-in sustaining cost of a barrel of oil worldwide is $60 a barrel. And that's pretty much where we're at. So if it goes down below that for any sustained amount of time, they're going to start shutting down a lot of these oil wells, creating a supply crunch, and it'll reverse. And so, everyone's real excited about gold and silver and uranium right now. I think you got to look at like what's really cheap. You know, what's the next thing to move, right? Like we talked about, platinum's probably about ready to have a breakout. You know, I'd be more focused on taking some of the profits from gold and silver and putting them into platinum, or taking some of the profits from gold and silver and putting it into oil. You know, nickel's also really cheap right now. That chart looks amazing. If you don't, I'll let you lead the, sorry, I don't mean to get.
No, absolutely. I feel like I always am front loading the conversations with what is hot right now, the gold and the silver, but these are the real opportunities. So let's talk about nickel if you're seeing something there.
Okay. Yeah. So here's the spot price of nickel. So it's about 15,000 a ton. And we can see this is pretty volatile, which is just, this is exactly what we're looking for as commodity investors, right? I mean, you just want to see just some massive spikes, massive declines. You want it to look like the lithium chart where it just goes parabolic and then comes back down, because that's where you can really make some money. Now, this is where I get really excited is if we zoom in here, if I get rid of the moving averages here, and I'll turn this into a line chart so that it maybe is a little easier to see. I mean, you can see this just looks like a dying heartbeat, right? So this is basically the cost of nickel, right? Now we had some little spikes here in 2024 and then came back down. And then we had this little drop right here. This was on Trump's Liberation Day when he held up the chalkboard with all the tariffs that we're going to, tariff this island 113% or whatever, right? So even on that, when everything got smoked to the downside, this really didn't fall that much. I mean, it only fell, what is that, 10% or something? Yeah, like 10%. Okay. So this is basically the cost of nickel. The fundamental bet with this is they have a lot of really cheap nickel coming out of Indonesia right now. And it's all run by Chinese companies. And basically what they've done is they've paid off the politicians there to allow them to run these cheap nickel mines, and they're just destroying the islands. You can see it on Google Maps. If you can just see the damage that's done. Now, the local people are trying to stop that and trying to clean it up. But the politicians are paid off by China to not do so. So when does that game end? I have no idea. This is kind of like when we're betting platinum 2 years ago, and the chart looked very similar to this. When is this just going to keep going on and on and on for the next 8 years? Or are we going to have a violent re-rating when the people of Indonesia win and we stop mining there, and instantly the nickel price is going to re-rate, and it's going to re-rate violently. But I have no idea when that's going to happen, and you got to be positioned before it does. So I like this one a lot right now. I really do. An easy beta way to play it is NIKL. This is just a Sprott's Nickel Miners ETF. And, you're getting a lot of the good, bad, and the ugly, but this is a way that just about everyone can play it. And caveat here, this is very, very small market cap. No one's betting on this. I mean, like, look at the volume right here. So far today, 10,000 shares. Limit orders only. Be patient. Wait for a retrace. Here's the lines I got: 1225, 1150, 1075. You don't, but you go up here to URNM and look at the volumes on URNM here. Okay, we got 549,000 shares so far just today. Okay, so don't get happy with the market orders on that ETF, but that's an opportunity I see right now is in nickel for sure.
That's a great one to go into, looking for those hated sectors. And it does feel like something that is unsustainable at some point in time. We don't know when, but I'm sure the situation will change. So really interesting to look at nickel. And I'll bring in another base metal as well that I wanted to talk about, which is copper. And you're mentioning recession concerns. And I know that people look at copper as kind of a bellwether for the global economy and what can it be telling us about what's happening there. So I wondered if we could take a look at copper in that context.
Yeah. Basically what we've had here. So I think a lot of this, we got to kind of discount. This was the Trump tariff. I think he said on the news or something, we're going to do a 50% tax on copper. And then anyway, said, oh, I was just kidding. This is how I'm looking at it and how I've been playing it for the last 3 years is this white trend line right here of copper. Okay. And anytime the price action has gotten down to here, it has just been a good time to buy, and any one of these, there's the Liberation Day sell-off. We can line that up, this point right here, with COPX. This is an easy copper miners ETF that just about everyone can buy, and this is the sell-off right here. I was selling puts and being put to the stock right here, so it was a little scary when it was just falling, and I was purchasing 100 shares at a time. But that, turned out to work out pretty well. I think copper is going to do amazing. I think that we as a planet are consuming more and more copper every single year, and the big copper miners are going away, and we're not discovering more. And so I think that's going to create a squeeze. I think it'll probably happen in the next, during this decade. I don't think you're going to have to wait until like 2030 or anything like that. And it already has worked. I mean, if you've just bought around this line, like if you just go to COPX here, just buy the dips down here, it's working. You know what I mean? I think this is going to be a little bit more of a slow grind. I don't know that it'll be the parabolic moves that we're all loving, like with uranium and gold. I think it'll be a little bit more of a slow grind, but I definitely think it's going to happen. Now, there is some risk about what you talked about. If we are going into a global worldwide recession, typically when we enter into a recession, copper gets hit, and it usually gets hit pretty hard. I've done some work before with timing up the recessions and looking at those hits, and it is a fairly accurate one. But as far as so far, it's worked what I've done, and I've been afraid of a recession since back here. I remember on my show in 2023, I did the top 13 reasons why we're going into a recession in 2023, and I've just been wrong. So if that has held me and stopped me from buying copper, I would have missed out on being up 40% just in this fund. You know what I mean? So I think sometimes things are cheap enough, and this white line so far has just proven to be gospel. And until that gets broken, I'm going to keep playing it that way.
All right. Well, we have been through so much today, so thank you for going through all of these different topics. I will let you go unless you had any final thoughts. And I do know you also have a course that we should tell everybody about. We'll have the link in the video description.
Yeah, it's a technical analysis video series for beginners. So it's 3 hours worth of videos going over the charts just like you've seen here. The first 30 minutes are me showing you exactly click by click how to set up the charts. So the software is not an issue. It's easy. You can set up your screen just like I have mine, or you can tailor it to however you want. And basically what we do is we take the fear out of buying and selling. I like to think of it like the fundamentals tell you what to buy and what to sell. And the technicals tell you when to do that, right? They tell you when to buy and they tell you when to sell. And it really is kind of a calming effect when there's FOMO and the chart is just screaming up. If you can line that up with some previous highs, you can feel fairly confident on that. And we go over all of that in the technical analysis series. I'm getting a lot of positive feedback from it, and I hope your viewers will find it helpful as well.
Amazing. So we will have the link down there. And any final thoughts you would leave people with?
If you like what you see, check out the TA series and also go to stevebartonmoney.com for more. Thank you for having me on the show.
Of course. Once again, I'm Charlotte McLeod with investingnews.com, and this is Steve Barton with In It to Win It.
Thank you for watching. If you like this video, make sure you hit the like button and subscribe to our channel. We'd also love to hear your thoughts, so leave us a comment below.